Good afternoon, everyone. It's just after 4 o'clock here in the UK on Friday the 29th of January, the first month of 2021 gone. Well, as you can see, this route still going, and today the decline slightly above that of the advances. VectorVest doesn't advocate buying stocks at this time. The short-term trend of the VectorVest Composite US is down. Underlying trend is up, and we've got a confirmed up in place. So if we have a look at the market timing graph itself, pull her up, and as you can see, the little pullback is hardly anything. So it's not that dangerous a pullback yet, and momentum still incredibly strong to the upside. If I put on the DEW market timing technique, which is a medium-term market timing technique, and I think quite useful at the moment. And let me make that moving average a color that we can see. We can see quite clearly that we actually closed below the moving average a couple of days ago, but the detrended price oscillator that confirms the signal has not closed below its center line. So the DEW gave us a buy signal way back on the 3rd of November, a really good signal, and it still hasn't given us the sell signal, and it's probably got a couple of days to go to give us that sell signal, but market is holding in at the minute. So only the shortest measure of the trend, the primary wave, is heading down. Market sold off strongly after the close last night in the US, and in fact have opened up this afternoon. If we have to look at the S&P 500, and we can see that this fairly obvious trend line somewhere between the 21-day and the 55-day moving average still holding the market, and looks to me as if the low of today so far has been defined by that simple trend line. That trend line now has got 1, 2, 3, 4, 5, 6 touches. That's a very important level. Yesterday was an inside day on the floor, and certainly a break of this low, this big red bar's low, would be quite serious. So what have I been doing? Well, I talked through these quite a few times this week, but in terms of viewers, well, FLGT I've held, and for quite a few days I've got rid of that and sold. Let me chart all of these, and well, first of all, the positions that I've got, I'm out of FLGT. I've taken a good money on FLGT, small loss in AMG. GRWG made money on half the position, out of the other half of the position at entry. Palantir, PLTR, very good money on that, sold it into strength. Peloton, I got out good money on half, got out of the second half at entry. If we chart those, you can see what this thing has done this afternoon. VectorVest people listening, I got this share out of the Midas Touch watch list. I'd never heard of the darn thing before that, but it came out of the Midas Touch watch list and sold into strength here. Very pleased with that one indeed. AMD lost a little bit of money here, but what can you do? By the way, it's at a very good level here, but I decided that enough was enough. GRWG out at entry, and PLTR, really good money. There's probably more upside in this, but the money's in the bank. And Peloton, good money on half, and got stopped at entry on the second half. On Monday, I'm going to have a long look at Logitech, also came out of the Midas Touch watch list. I'm going to have a long look at Logitech, at Square, and Gravity, although the market cap on Gravity is very low and the volume is not good. It's a share that I've done well on before, and the fundamentals on VectorVest really couldn't be better. If we chart those, That's Logitech, and you can see why it came out of the Midas Touch watch list. I particularly like the way it came back and kissed that old high and has shrugged that all off. Down a little bit today, pretty much everything is, but I shall be looking at that on Monday. That's Square. Now Square I got stopped out of last week, just here. It's come right down to this old high. It's amazing how often they do that. And very, very good day in Square yesterday. Off that, and that low is also, for those of you that are fib analysts, it's 127 of this run up. So very important level, and I shall look for a level in that on Monday, I think. And the last one that I like best is Gravity. And Gravity I've traded in before. It is, as you can see, that is a textbook spring, and if I were to attempt a trend line here, we can see there's a trend line in place as well. Those of you that are fib analysts, you'll be able to see the fib at your leisure. And if I were to put on the stochastic here, we can see that the stochastic at the same place is in the buy zone, and it's showing reverse divergence. So I'll be looking at that on Monday. At the moment, the front page of VectorVest says, do not buy stocks, and you get very, very lucky when you just simply follow that. I want to see this short-term measure of the trend turn back up and the little pointer in the green, and then it'll be time to look for stocks again. I'll be looking at the Midas Touch watch list, but those three stocks stood out. Now let's have a look at the UK. And the UK market has been down. As you can see, the buy-sell ratio has fallen from a week ago. It was 9 to 11. It's right down at 4 now. So that was maybe the only warning that we got that this was going to happen. Again, if I go to the market timing graph, we can see that that divergence that I've been talking about, and I've been talking about so many times, is still in place. That's that buy-sell ratio falling off the side of a planet down here. Again, the DEW hasn't turned down as yet. So even medium-term traders should still be holding positions. My portfolio in the UK is a medium to long-term portfolio, and I'm trying to do my best to let the darn things run. And I haven't really done that much. In fact, this morning I looked at the portfolio and I was determined to raise some cash, but when I went through the shares that I've got, I was reasonably pleased with them all. The only one that I cut was plus 500, and that had hit its VectorVest stop loss. When the general market starts to turn down, folks, then there can be no equivocation on stop losses. You just got to take them. If the general market is trending up strongly, then maybe you want to give the darn things the benefit of the doubt for a day or two, depending on your own rules. But plus 500 is gone, and if I, in fact, sort these by RT, you can see there's an awful lot of holds, only a few buys, and if I chart those, very difficult to get away from a police siren in London. That is SLP, and it's doing exactly what I would expect it to do. It's pulled back to that last old high. This was Thursday close. It charted a hammer pattern. That is game sis. I'm a little bit underwater in this, but I'm not. Nice hammer pattern in the zone between the 21 and the 55. That looks great to me. This is Halma, and moving averages are rising. It's pushing on a all-time high. That can't be bad either. This is Tristel, came off after a ran up. I bought it here, so I'm up nearly 50% in that. It's still above a 21-day moving average. It can't be too bad. That's Team 17, and it's finding support exactly where I would want it to find support, in that markets don't go up in straight lines, folks. They make a series of rising bottoms, and that's exactly where I would expect big money to be punting it. So that looks fine. There's Games Workshop. Look at the tails on these candles around this support area. So that looks fine. Again, this could be big here because we could have a spring formation here on CCC. Found support here. Today's quite negative in London. We have to be careful. The market's heading down, but that's pushing on all-time highs. That's Pan-African Resources, and the gold price has rallied this afternoon with the Dow, S&P, and this is still, it's pulling back to this old top, so there's nothing there that makes me worried. Belway, I think we've probably got a spring formation starting in Belway, although the fundamentals here, as you can see, are not great. That's the GB group, finding support somewhere down around here. Again, all-time highs. As you can see, there's the February high last year, and that has been tested. So I like this company. I think this is a great company, GB Group. That's Pershing Square, maybe the weakest of the lot. And if we have a look at this, you can see that it's broken that last little trend line. It's broken the old top, so maybe that one needs the most scrutiny, but still on a hold. JD Sports broke that trend line. That's a worry, that's for sure. Broke the trend line's worry, but there is support levels here somewhere. If we look at this a little bit more carefully, you can see these lines, and we've got resistance becoming support. We've got resistance becoming support, and this level really should have held here. So this is a bit of a worry. As you can see, there's a lot of overhead resistance at the February highs, so still on a hold. Cranswick is doing what Cranswick does nothing until earnings season, and that's Lion Trust Asset Management finding support again at these lows. Fundamentals in this share look absolutely outstanding, needs to get through these highs. And then Polymetal maybe on dangerous ground at that 786. This 786 has got a hold. I looked at their numbers this morning. Their numbers look good, but as I spoke to the VectorVest regulars on Monday afternoon, there could easily be a bit of pain in gold yet before it makes a bottom. I'm exceptionally optimistic on precious metals for inflationary reasons. Corn, soybeans all on 10-year highs. Inflation is starting to nibble in, but the pattern where gold is pulled back in that flag formation has been quite difficult. It's been now pulling back for months on end. There was a failed breakout. So my advice to everybody that wants a reasonably quiet life is to avoid gold shares. I tend to be particularly addicted to them, and I made too much time talking about them and trading them. They've been very good to me over the years. Sooner or later this gold market will move up with a vengeance. Maybe silver has already started, and the chart on silver looks much stronger in fact than that of gold. Copper is still going well. Oil would seem to be going well. And all of these commodities plus all of these stocks I will analyze in a great deal of detail on Monday afternoon at 1:30. I look forward to seeing all VectorVest subscribers there. Just remember, folks, that the first measure of the London stock market, the first measure of the American stock market has keeled over. The next measure, that DEW, has got one foot in the grave. It's closed in both countries below the moving average, but the momentum still hasn't given a signal. So we have to be careful. I think that, as I said earlier, you can be a little bit lax on stop losses when the general market is rising. But if you see the general market starting to keel over, we don't know if this is just a benign pullback of 6 or 7%, which I suspect it is, but we don't know whether it's that 6 or 7% pullback, or whether we've got a February and March on our hands, 2020 February and March on our hands. We simply don't know. I think myself that the pullback will be quite benign, 6 to 8% of that order, and will start to move again. But I shall be trading the market and not the forecast. So just keep your eye on stops. Just remember, if you do get out, like I got out on Apple the other day, well, you can always get back in again. Okay, so look forward to seeing you all on Monday afternoon. Have a great weekend. Bye bye.